Hello and welcome back to another opening range mastery training video, part of the video training for opening range success formula and day trading with hot scans. I'm going to do something that is not really related to the opening range in this session, but it is incredibly important. We talk about it all the time in terms of identifying inflection points, and that is to be very cognizant of huge round numbers. And I mentioned this the other day in the room quickly, and I think it just is worth expanding on because you don't often see the action like we've seen, just so blatant. And Apple happens to be a stock that really likes round numbers, not just the hundreds, but the fives and the tens. But the 600 number has really been a critical round number for Apple, and just knowing that it's definitely helped me a lot in trading it. I want to point out what I mean. So I just took a horizontal line and I drew it at 600, and we're looking at a 5-minute chart. And if you look at my chart, you can see this goes back to the 14th, which is almost a week ago. Certainly you've got the 14th, 15th, 16th weekend, the 19th, and the 20th. Alright, so quick background. The point of watching for round numbers is that they often become support and resistance where there is no other reason for that number to be support or resistance. It's just a big round number. And we've done actually separate courses on this where you can literally see the volume picks up at big round numbers, and depending on the price of the stock, that round number gets smaller. So if you're talking about a $50 stock, that round number is definitely going to be the fives and the tens, and might even be the single handles, the 51, 52, 53. So you want to watch out for it. But when you get to a huge one, like 100, or like 50 for the first time, or 500 or 600 when you get up into these prices, you really want to keep your eye open to see whether or not the stock is going to respect it. And the first time Apple got up there, you can see it had a huge respect for it, came right off it, and you can even see the volume spike. All right, now I'm going to point out the volume spikes first. We're going to come back to these days. Take a look at this volume spike lines up with this bar. This volume spike lines up with this bar. This volume spike lines up with this bar. This volume spike, well, it seems relatively small relative to the bigger ones that I'm pointing out, and in fact it is, lines up with this bar. My point is that while maybe not every single time you got up to that 600 level, majority of the times you got up to that 600 level, the volume came in. I really should be able to stop the video right there and say, what more do you need to know that big players are watching big numbers, big round numbers? So should you. Are they always going to be as blatantly resistant in terms of the price action trying to get through it as this one has been? No. Sometimes it's only once and then it goes. But as I was saying the other day in the trading room, it really, 600 has been really important. So yesterday when we broke that 600 level, I was saying, look, this is going to get interesting here, and I in fact bought the pullback to the 600 for a nice run to the end of the day. Again, we were already over the opening range. We had an opening range breakout in gear, so there was a lot there. Going forward, this number is still going to be important. If we pull back to this level, it's going to be important. All right, it's going to be key support, or we should look for it to be key support. If we break it and we come back up to it, it's going to be key resistance again. All right, so Apple and 600. The next time Apple is trading around 600, you want to be aware of that, whether it's because you're trading Apple or because of its influence on the overall market. That's the straightforward take on it. All right. You get up to it, it's resistance. You get up to it, it's resistance. You get up to it, it's resistance. Now, I'm not advocating that you're going to short it and try and pick a top on a stock that's so strong as this, but it's a great place to take profits. It's a great number to make sure that you're not buying right at it if it's likely to roll over. It's a great number if you see a breakout and you want to buy a retracement, or you're looking for a breakout to buy. All right, so that's how you use the absolute number. But there's more to it than that. The average range here is about $14. All right, if I were to take a $14 number, and let's just draw it roughly, that's going to be about 86. Let me get a horizontal line here. All right, that's what one average range is going to look like. Now let's take that and cut it in half just to make it tighter, and it's going to be about 93. All right, all I'm doing is taking the average range of the stock, or I should say the ATR, average true range, over the last 10 days, and saying, you know, that's a pretty good volatility measure. All right, so I'm going to roughly 93. All right, it's not exact. All right, going forward, and even I've been looking at it this way already, it's not just the 600 level, right? Because you've got the big players that aren't going to look just at 600. It's an area around 600. In other words, at what point do the big players look at Apple's price action and say, you know what, it's topped out at 600. It's rolled over, and that was it, at least for now. Half an ATR to an ATR is probably a good judge to start being able to think that way. All right, now it's going to be the same thing, in my opinion, on the upside. All right, so from 600 up to about 607, maybe 610, because it's a nice round number. All right, and in fact, the pre-market action in the last 2 days topped out around 608. All right, even when we're having trouble with the 600 level. So more than just looking at the 600, I would look at the 600 plus or minus a half an ATR as a range for Apple to measure where Apple is trading relative to 600. Once we get up and over the 607, 610 level, then in my opinion we've broken the 600 hurdle, and certainly at that point a retrace back to the 600 level is going to be a good retracement after a good breakout. Until we get through that 610 level, this 600 is still kind of a questionable area as to whether or not Apple's going to be able to break it without some kind of a consolidation or even a correction. All right, so just to summarize, you've got your big round number, you've got an area around that big round number, and you can define that area around the big number a couple of ways. Keep in mind what the average true range of the stock is so that you've got a reasonable level of volatility. As it turns out, Apple's got some good consolidation and significant highs that line up with about that half an ATR level that I would consider. And looking forward, you could pretty much look at between 590 and 610, or if you want to get a little more precise, 593, 607 as an area for significant support and resistance in Apple, all based on the fact that 600 is a big round number. All right. Again, this is not just Apple. If you look at any other stock trading around major numbers, you can find similar patterns. And when you start to see them develop in this way, it can really be helpful for identifying inflection points, especially inflection points that you can look to line up your opening ranges with to trade reversals and breakouts. So I hope that helps, and I will see you in the next video.